And Tilman, we will be asking you to keep your comments to 8 minutes, which I'm sure will work fine.
8 minutes. Good morning, everyone. Thank you for having me. I will largely agree with Anton, and I'll do it in 8 minutes, and I will make 4 points. The first one is, I absolutely agree that understanding clients and their needs is at the core of what we need to do. I will secondly argue that that means thinking a little more broadly around financial services as wealth management for the poor. Too often, despite our rhetoric, we remain credit-focused, even in this session and even in the remarks we just heard. And I will then say quickly that we do have a governance opportunity and an obligation, in particular those of us who are socially motivated investors, and then I will offer a complementary view beyond microcredit. In terms of understanding clients, and that's the key, poor families, like everybody else, have very, very tangible dreams. This is Alberto Lozano. He and his wife, Epifania Vargas, are part of a graduation program that CGAP supports in Peru. And as part of this program, we asked them to draw their plans for the next year. You see that on the right-hand side. It's called Proyecto de Vida 2012. And here are their dreams. They want to buy and protect more livestock. They want to build a new stable. Actually, their new business venture that they are gearing up for is raising guinea pigs. They want to expand a house. And they want to pay school fees for their 7 children. You see them there at the bottom. And you see the 2 older ones in school uniforms. No, all these dreams require financial services. But notice no product names on this slide yet. First, we need to understand what are the aspirations and what does the family do. And then we need to help them achieve these dreams. For some of this, credit is probably required, but insurance is equally important. And I'd argue if you look at school fees, that's a cash flow spike for a poor family, but it's not an unanticipated cash flow spike. And probably it would be better to save up and earn interest rather than to borrow for school fees and pay interests back. The reason why we don't have enough savings products is we probably don't understand client needs, and we haven't worked hard enough on the product offering that's really needed for paying school fees, which is a commitment savings product. Now, poor people are also very, very vulnerable. Anton spoke to this. This is data from IFAD that looked at 9 countries. You see at the top there are an estimated 1.7 billion people worldwide living of $2 to $4 a day. And there are an estimated 2.6 billion people living below $2 a day. The reality is, because of these vulnerabilities that Anton talked about, over a 2 to 5 year cycle, this is what this data shows, a number of families move out of poverty. But if there's a shock, in particular if there's a shock to the breadwinner of the family, also, unfortunately, many people run the risk of moving back into poverty. So poor people have aspirations and dreams, that they are vulnerable. For all of these, they need financial services, and they use them very, very actively. This is a slide from Stuart Rutherford's work in Bangladesh. It looks at a family of 3. It's Khaleda and Hamid sitting on the bed with their son. A few curious neighbors are peeking in. This is a snapshot of their current portfolio of financial arrangements. 3 things strike me as I look at this picture. The first one is how very, very active they are. There are 13 distinctly different arrangements that this family, Hamid and Khaleda, has in place at this point in time. The second thing is they use all products and services. You see insurance there, you see savings, you see loans, including giving loans and taking loans. Hamid and Khaleda are very, very sophisticated and active users of financial services. But even in Bangladesh, 10 out of these 13 products are coming from the informal economy, from informal provision. And we know that informal provision tends to be incomplete, unreliable, and relatively expensive. So what to do? Poor people have dreams, they are vulnerable, They're very active managers of their financial life. We need to help them manage their lives, their financial lives, as well as they possibly could. And to do so, we need innovation and experimentation with business models. This is the example of the IFMR trust in India, and I should disclose that I'm very close to this institution. When I lived in India, I helped it start. The idea that the IFMR trust is pursuing is to first understand the family, be product agnostic, sit down, and you see two of the interviews, conversations that happen with families in the pictures on the left-hand side. Sit down with the family, understand its aspirations, understands its current obligations, understand its income streams and its expense streams, and then devise with them a program that plans for all current and future expected and planned expenses and incomes, that grows their physical, financial, and human resources, that protects them against unexpected and extreme shocks, and that diversifies its household assets. To do that, and to meet all the needs, you need to be pretty sophisticated, and you need to put together a broad offering of products. Here's what the IFMR Trust does. At the end of the day, they have to have available savings products or investment products, insurance, and credit loan, and they do this across the board. There are 15 distinct products on the slides. And one thing that is notable is that only the credit piece is what the IFMR Trust on its own account. It is the principal, if you will, in the economic transaction. For all the other things, for the deposits, for the insurance, for the payments, it works in partnership with other institutions because it is very, very difficult to be a provider of all these services on your own. So poor people have aspirations and dreams. They are vulnerable. We need to be creative. We need to first understand these needs and be creative in meeting these needs. That requires business model innovation and a broad product range. And those of us who support all this as investors, we do have an obligation, we heard that earlier, and I agree with that. We also have an opportunity to ensure that from a governance perspective, institutions do the right thing. This is a slide with board seats that socially motivated investors hold on microfinance institutions, between holding companies, between DFIs, these are development financial institutions, microfinance investment vehicles, MIVs. Together they hold some 325 board seats. If you compare that with a mix and if you match the organizations, that's about 80% of our entire field. So investors do have the opportunity to exercise governance control across the investment cycle, whom to invest in, what type of covenants to sign, whom to exit to, etc. And then lastly, hopefully within my 8 minutes or even below, a complementary view on microcredit. I think sometimes when we have these discussions, we might appear to talk past each other. And that has probably to do with how we have evolved the thinking beyond microcredit. Microcredit was thought 10, 15 years ago as solving a number of problems at the same time. We have realized that that's not the case. Poor people to the lower left need the access to the broad range of financial services. That's what I've talked about. And whether they need to be provided by financially viable institutions, whether they are for-profit or non-for-profit, is actually a secondary concern. But poor people, of course, also need the access to basic services. That's the arrow to the right. But notice that these basic services, health, education, water, etc., often have a public good character, and often they therefore need the general budget support of the nation at hand. And then, to the degree that the credit goes to productive purposes, poor people obviously also need access to the markets for their underlying activities. And here notice there's an infrastructure component to all of this that is very important. Some of that infrastructure, the road to the next marketplace, also has a public good component. And I mention this because all these things are important, not one more important than the other. All these things are important, but in nature they are very, very different. And we need to keep that in mind so that we don't mush it all together and don't realize what has to be provided in a financially viable, self-standing fashion versus what are the areas for which we need general budget support or other means of support, because we are basically talking about public goods. Thank you so much.